So when I first started investing, guys, I was about 19 years old, and I started with about $10,000, and I picked my own investments here and there, and I basically broke even in a way. I made some money, but it was more like I broke even. And I found out a lot about Warren Buffett, and I was like, if Warren Buffett is so good, if he's so great, why don't I just use the smart kid analogy, where if you have a smart kid in the classroom and you copy his test scores or whatever it is, wouldn't you just get the A like a smart kid? The answer is, when it comes to investing, it doesn't work like that. So although, for example, Warren Buffett investments are basically public, if I were to buy Apple when he buys Apple, Bank of America when he buys Bank of America, Delta when he buys Delta, the answer is, it might not make sense the way you think it makes sense, because what Warren Buffett has to do when he's a billionaire is not the same thing he did when he was just getting started. Now, by the end of this video, you'll know exactly why that doesn't make much sense. You'll know also what my strategy is, and you'll know also what the best potential strategy for you is as far as making money in investments long term. Now, as always, guys, like this video, on top of that, also subscribe, hit the bell to get notified, because I have more videos on this channel about passive income, investing, and also paying off debt. Now, the very first thing is, guys, as far as Warren Buffett works for Berkshire Hathaway, right? He owns a lot of stock in it, but at the end of the day, the guy works for Berkshire Hathaway, and Berkshire Hathaway is a public company. So every 45 days, they have to file a 13F with the SEC. Now, what this means is, on this 13F, it shows you exactly what they bought, what they sold, for what price, and everything else. Now, you might be asking me, Tommy, this is easy. Monkey see, monkey do. If you see a monkey and the monkey's doing X and you do X, you should get the same exact result. Now, I really should stop calling Warren Buffett a monkey, because he's not. He's Warren Buffett. But overall, the idea is, it really doesn't work like that, because there is a stretch of time between, for example, 45 days, a lot can actually happen. The reason why he bought, the idea behind it, and also if he decides to sell, you won't find out about it until later. That's the big risk, and that's why you never ever want to take investment advice from someone that's in the public, unless it's going to be like this very long-term strategy. Now, overall, if you watched one of my videos early on when I was using, for example, the app Acorns, and then you watched me today, like 4 or 5 years later, and you're like, wait. You went from having 7 investments, having 80% stocks, 20% bonds, so now you have 100% of your money just into stocks, and you only have 1 investment. Like, a lot has changed, and the idea is, a lot is going to change with Warren Buffett. As far as the investment he makes, the reasoning behind it, all these things constantly change, and the answers and the reasoning always change. Now, I learned this very early on, not from Warren Buffett, but for example, from Benjamin Graham. Benjamin Graham, I have one of these books right here. Where is his, well, this is a large book I have for him right here, but this is one of his larger books. I want to make sure I don't lose my chapter, because I have this like, okay, yeah, here's my chapter, okay? But Benjamin Graham, right? This guy is basically the godfather of investing. He taught Warren Buffett everything he knew, and basically knows the guy's still around. And here's the book right here. It's a thick book, but it makes a lot of sense, and it's actually worth it if you want to be an investor. But the idea is, he had this entire rule, Benjamin Graham, where he basically said, whenever you're investing, you want to buy secure things that make absolute sense. So you want to buy nets. That basically means if the company goes bankrupt tomorrow, you can basically get your money back plus some profit. And that sounds cool, but that's very hard to find today. And Benjamin Graham made most of his money, guess what, through Geico. And Geico broke every single rule that he basically had with his entire investment philosophy, because the guy changed his mind, okay? Then you had, for example, John C. Bogle, the godfather when it came to index fund investing. And towards the end of his life, he invested money into a hedge fund to support his kids. So the reasoning was different, but he changed his mind also. The guy that invented the 4% rule, the guy that started basically the 401k, all this stuff, these guys have changed their mind as time goes along. The point is, okay, the scary thing about investing into individual stocks and also investing based on other people's opinion and also their stock picks, that basically people can change their minds and you will not find it about it, and they will sell. Peter Lynch says that all the time. And by the way, even scarier is when you look back 50, 75 years at the top 100 companies that were there before, none of those companies exist today. So if you think you're gonna pick Apple, Bank of America, Delta, these companies here and there, you're like gonna make money because he bought those companies. Well, are you gonna hold them for how long exactly? and when is the right time to actually sell it, because you don't really know what you're doing. And that's the risky thing, okay? Now, here's a personal story that I want to share with you guys before I get even into more details in this video, okay? But Warren Buffett, during the pandemic, he sold Delta stock. And he sold Delta stock for a specific reason. Not many people understood it. He is very wealthy, right? Berkshire Hathaway is very wealthy. And the idea was that there was going to be some stimulus checks sent out. And the risk was that they wouldn't give Delta any stimulus check because it had a very wealthy shareholder. So the idea would be, why don't you just have your shareholder dump the money in there? And Warren Buffett did not want to be involved with that stuff. So he basically sold his stock out because of that reason. Also, when you borrow so much money, the economics of the business basically changed, and he did not want to be involved because his return on capital was going to be different. That's why he sold the company. But your boy right here, it was a perfect time to actually buy Delta. And I made around 128% on Delta when Warren Buffett was basically selling. So the guy's selling for certain reasons, and I'm buying for different motives. But the point is, we both understand what we were doing. Now, my point is, okay, you gotta know what you're doing, and you can't rely on a monkey see, monkey do, because this deal is very expensive. We're dealing with real money. Money equals time, and if you risk your money over dumb stuff, it's going to basically cost you a lot. So you gotta know what you're doing. Now, in all honesty, guys, here's what I wanna get to, which is number 2. The best investment strategy is going to be the investment strategy you understand, you can keep up for a very long time, and you can consistently keep investing money into. Now, overall, I would consider myself a I wouldn't say that, but a full-time, part-time investor. Now, how does that make sense? I can't tell you, okay? But you have a passive investment portfolio. That's what I invest most of my money into. Around like 90% of my money is invested into that passive portfolio. And that has one investment, which is just basically, for example, the S&P 500. I put it into an ETF, VOO. That's it. I use Vanguard as my broker. I have a 401k. I have a Roth IRA. Guess what they have in there? Just the S&P 500. My reasoning is very simple. America's big. We have the biggest economy. If we fall, everybody falls. And at that point, it doesn't matter. It's that simple. And that's why I invest the way I invest. And my entire thinking is, I believe that America is going to be better off tomorrow than it is today, and that's why this strategy works best for me, and that's why I'm able to invest this way confidently. But before I got to this point, I was investing into bonds. I had diverse investments all over the world, but then I figured that, hey, with knowledge, I changed my mind and I became a lot more concentrated just in the US market. But people that watched my video 3 years ago and stopped and kept investing that way, they wouldn't find it out until much later. And that's the risky thing when it comes to following people's investment strategies. People can change their minds. Years ago, Warren Buffett would have said, I would never invest into Apple. But now he is investing into Apple. And people that are around him, like Ted and Todd, I think their names are, they're making investments into technology companies. Basically, they understand them very well. The idea is you want to be the best possible investor you can be based on what you know. Now, here's my point here. 90% of my money is put in there, but I like to use 10% of my money potentially to be a part-time stock picker. Now, I enjoy that, but I would not enjoy spending 8 hours of my day reading financial reports, 10K forms, 10Q forms, trying to keep up with, for example, all these companies, see exactly where the opportunities basically are, learn all this business, because that's not what I love to do. But that is what Warren Buffett loves to do, and that's why the guy is so good at it, okay? So overall, you have to pick exactly what you want to do. And it can't just be centered around, I want to make money because Warren Buffett does it, so it's going to work for me. The answer is not that simple. Now, here's the third part of this video that I really want to share with you guys, and it's very honest. I noticed something when I started to study Warren Buffett a lot more, not just from the sense of like business, but also from a personal standpoint. And this guy is a massive mentor for me. I learned so much from him you couldn't even imagine. But one question that he gets asked all the time is, Warren, what do you think about investors that are just starting out and they want to be like you? And that's basically what they want to achieve in life. They want to be like Warren Buffett. He always pauses and he says, I think the best thing you can do in your life is follow your passion. That way you never have to work again. Try to figure out exactly what your passion is and work at it very hard. And that's the idea. You know why he says that? Because he understands that the attractive part about Warren Buffett is his results, where he is right now. The unattractive part is actually all the work it takes to actually achieve all those things. To actually compound that amount of information and knowledge over a long period of time is not possible if you don't have a real sincere, enjoyment that comes from understanding businesses and seeing how these numbers tick, how they work, and trying to collect things and trying to keep a record. He loves this stuff. I don't love it. Now, if you love it, it makes a lot of sense to go ahead and pursue it. But if you don't love spending 10 hours, 8 hours a day reading financial reports and drinking Coca-Cola, the answer is it's probably not for you. Now, for me personally, what I enjoy to do is put my money into the S&P 500. I put money in there on the first of every month. Whether it's raining or it's shining, doesn't matter, market up, market down, and I basically just do that. Over the long term, it'll compound at 12%, and I'm happy with that. Now, as far as my 10% that I might put in, for example, into individual stocks, I'm gonna do some research on some companies, maybe 2-4 hours I'm spending per day on this stuff, but in reality, it's just more because I like having fun, but it's not gonna be a career for me because I would hate it if it was a career for me. And on top of that, I like learning. I love reading books. I like devouring information, but more than that, I like devouring information that's very complex and then understanding it fully and then passing it on and teaching it to you guys here on YouTube. That's my thing. That's what makes me tick. So overall, the whole point of this video is this. Warren Buffett is successful because he's good and he likes what he does. If you try to copy Warren Buffett's formula, the answer is because you're not with Warren Buffett 24/7 and you can't make a call and you won't tell you, he hates giving investment advice, by the way. He won't tell you, hey, I just bought this, I just sold this. He's not in the business of giving investment advice. He does that all the time. So you will not get updated information. And the decisions he makes as $1 billion heir or whatever are not the same decisions that make sense for you when you're just getting started. You know, he's investing right now into utility companies, and he says utility companies are a great way to stay rich, not to get rich. If you try to copy that, you're gonna sustain your income or sustain your profits or sustain your capital, but you're not really going to grow it at a good pace because it doesn't make sense for you. So if you want to be an investor, if it makes sense for you, read the books, do the research. If you like it, you like it. If you don't, figure out what you do like, because overall you can be very wealthy enough to do what you want to do in this life and not have to basically chase something that you actually don't like. You can actually have both. And by the way, Warren Buffett, what I like the most about him is that his life is like $100,000 per year life. If you think about it, okay? The guy pays himself $100K per year. He has a paid off home after 30 years. He drives a Cadillac. He eats nonsense like a little baby, and he has a very good life, but he enjoys his life, okay? That's the most precious thing that I love about Warren Buffett. It's not the money, it's that he lives a lifestyle he actually enjoys. Guys, that's it for this video. Thanks for watching. As always, guys, comment down below. If you made it all the way to the end of the video, comment down below, invest, so I know you made it all the way to the end. On top of that, up here is my face. Over here is my another video, I think, or backwards. And as always, long-term team officially out.